In my opinion, these are the 7 best monthly dividend paying stocks out there for right now and possibly for the rest of your investing career. They made this list for 3 reasons. Number 1, they pay a monthly dividend and have a dividend yield of over 3.2%, and I'm using the ETF SCHD as a benchmark for that. Number 2, they've paid a consistent dividend for at least the past 5 years. And most importantly, number 3, the company has gone up in value over the past 10 years, which means you won't find any stock charts that look like this, also known as dividend traps. Our first stock is Realty Income, ticker symbol O. O is a real estate investment trust, which means that it owns and sometimes operates real estate. O specifically targets buildings that retail stores like to use to do business out of. In other words, this company owns the building of stores that we go into every single day. O has over 1,100 different clients in over 79 different industries. Some clients are very well known, like Lowe's, 7-Eleven, and even Chipotle. O owns property mostly in the United States, but does have some properties in Spain, the United Kingdom, and the US territory Puerto Rico, which means O is diversified and also profitable. O is bold enough to call itself the monthly dividend company, and it's possible thanks to its 98.9% occupancy rate in over 11,700 locations. O, of course, was not an overnight success, but it does have a long history of it. O is considered a dividend aristocrat. In order to have made this exclusive list, a company has to have paid a dividend consistently for 25 years and also have that dividend growing for 25 years. If that's not difficult enough, the company also has to be in the S&P 500. In addition, the company has to have a market valuation of at least $3 billion and have a trading volume of at least $5 million a day for the previous 3 months. What all that means is that the bar is very high, and O makes that list. O pays a monthly dividend and has a dividend yield of 4.65%. Our second stock is Gladstone Capital, ticker symbol GLAD. Gladstone Capital is a business development company, and they help businesses develop by providing money for buyouts, acquisitions, and business growth. So this company uses money to make money, similar to how a bank uses money. Now, they don't just invest in any businesses. They do have some criteria that need to be met. Gladstone will typically invest $7 to $30 million at a time, and they do this with companies that have a revenue of around $20 to $150 million. In addition, the company has to have an earnings before interest, taxes, depreciation, and amortization, or an EBITDA, in between $3 million and $25 million. And of course, some other criteria that are left to interpretation, like a proven business model, limited market risk and technology risk, potential to expand cash flow, and diversified customer relationships. Some sectors that they're currently invested in are aerospace and defense, restaurants and food, healthcare, specialty manufacturing, and many others. Based on these holdings, it looks like Gladstone is looking at companies that have a high chance of being able to pay back their loans, as well as be broadly diversified amongst multiple industries. This is a company that just barely made the list because the valuation of the company almost didn't make the criteria. But definitely keep your eye on this chart. Gladstone Capital pays a monthly dividend and has a dividend yield of 8.98%. Our third stock is STAG Industrials, ticker symbol STAG. STAG is a real estate investment trust similar to Realty Income, but with a significant difference. STAG focuses on buying and operating industrial properties throughout the United States. STAG owns 563 buildings in 41 states at a valuation of $7.7 billion. STAG's tenants are industrial companies, so their needs are going to vary pretty significantly. And STAG, of course, needs to keep these tenants in order to make a profit. And they can do that based on the solutions they provide. Solutions like getting an initial space to do business and expand as the needs grow. They offer the ability to custom build for their tenants and can even buy an existing building to speed up the process of getting them in a facility that they can use. STAG can buy a tenant's property and provide them cash and lease the building to them so they can continue to operate via leaseback deals. They also provide sustainability solutions and can move an existing tenant to an entirely new building if needed. STAG pays a monthly dividend and has a dividend yield of 4.35%. Our fourth stock is Main Street Capital, ticker symbol MAIN. Main Street Capital, like Gladstone, is also a business development company with a key difference. Main Street is also a principal investment firm. What that means is that they themselves invest directly into the companies without using any third parties. In addition, Main is also internally managed. What that means is that all of Main's employees work on Main's investments solely. Main Street generally invests in companies with a yearly revenue of $10 to $150 million. This company has $6 billion of assets under management right now, and a total of 195 different investments. There wasn't much more information on the exact requirements that this company uses to invest in other companies, but as long as the loans keep getting paid, that means Main should be able to keep paying out their dividend. I would expect anyone with money in this company would be watching the quarterly and yearly statements to make sure that the cash is still coming in. Main pays a monthly dividend and has a dividend yield of 7.32%. Our fifth stock is Agree Realty Corporation, ticker symbol ADC. ADC is a company that wants us to rethink retail. It owns 1,707 properties across the 48 continental United States. This company is very similar to Realty Income in the sense that it owns the buildings that retailers operate out of. The company has a really interesting feature on their website where you can click on your state that you're in and you can actually see what properties they're currently leasing out to. For example, with just a few clicks, you can see they work with the Academy Sports in McKinley, Texas, and also work at this Advanced Auto Parts in Jacksonville, Florida. What that means is you can go drive around the block and find find an ADC property most likely. ADC has a monthly dividend and has a dividend yield of 3.83%. Our sixth stock is LTC Properties, ticker symbol LTC. LTC is a company that invests in senior housing and healthcare facilities. They have properties in 29 states and have over 204 individual investments. It's no secret that we're all getting older every day, and that also applies to the baby boomers who are now entering retirement. And we are approaching something called the Great Retirement, which essentially just means a lot of people are leaving the workforce, and what happens next after that is they're going to enter nursing homes and they're going to need more healthcare. LTC, based on that information alone, seems like a great long-term play. LTC pays a monthly dividend of 6.08%. Our final stock is Pembina Pipeline Corporation. PBA is a Canadian pipeline company that moves hydrocarbon liquids and natural gas. Natural gas is big in North America since we use it to cook and for electricity, and it's also great for parts of the country that don't actually have lines that run out there so they can use their propane tanks in order to get the energy that they need. PBA just barely made the list, so you might want to watch the chart as well, as it's very close to its pre-pandemic levels. Now, of course, PBA's price is going to swing due to a lot of factors, with it being an energy company. The price can be affected by laws and politics, supply and demand, global events, and many other things. But as far as dividends are concerned, they've paid out a consistent dividend since March of 2013, almost 10 years at the time of recording this video. PBA pays a monthly dividend of 5.51%. Now, before you take a position in any of these companies, we need to remember that investing is risky and you could lose your money, and also that there is a lot more to these stocks that I could fit in this one video. So remember, I'm not a financial advisor. This is not financial advice. You should use this video as a good starting point on your dividend investing journey. And of course, I recommend you talk to a financial advisor, someone who can look at your individual needs, wants, and goals and can help you make a plan. I'm just some guy on the internet that wants you to know a little more about what you're investing in. Individual stocks can be risky to own, so if you want to take some of that risk on the table, I made a video of some really great ETFs that pay monthly dividends, so go check that out. And of course, best of luck in your investing journey. If you thought this video was valuable, go ahead and click that like button, subscribe for more money, finance, and crypto content, and I'll see you in the next video. Take care.